Good morning. All right. 1 second. So we were looking for a correction. We got correction. It's coming. It's not over. And so now, as we assess what's going on, has the trend changed? Well, answer that question is pretty simple. The way we do it, don't need to draw any lines. Just look to the left. And simple definition is it still making higher highs and higher lows in the time frame we're looking at. And so the futures here, the NASDAQ futures here, make it obviously clear that it's not. Prices pull back and closed under the prior pivot low. So it's no longer an uptrend. Yesterday, we talked about the possibility of this pattern evolving into a head and shoulders top. So we'll see what happens today, but things are down just a little bit here. Qs were up a little while before, but not a big deal. So what we talked about yesterday was this pattern possibly evolving into this. And the way this is broken down, it's a textbook start to it. I mean, we'll see. So it took out the prior pivot low. So it's no longer in an uptrend as far as this part goes. It's in a sideways trend. It's not in a downtrend yet. So now, does it hold here? There's some support. So we're looking at these futures, right here, there's this cluster of bottoming tail bars right there. So there's some support there. So can it lift off here today? Do buyers come in and push it up? And then, of course, what we possibly get here, and then roll down to eventually down here. So as we do that, right, we always, have some bias for this possibility. Can it break a prior day's high, which is way up here over here? This bar is just starting, of course. So today, after this move down, today may just be a chop around day. But yet, we're looking at the futures and it did gap down. But, we start here and just see how everything else evolves, and things are beginning to stabilize. As you can see, this movement down, this eventual little move up, big momentum, it stabilized, it couldn't bounce, which is bearish, it bounced, dropped again, and now we see the momentum beginning to stall. We had discussion about that in the room yesterday and interpreting that. And so here it made the new low and now a deep retracement. So now this is beginning to form the possibility of a head and shoulders bottom. We'll see if this holds here. It turned back up this morning. So multiple time frames. We'll see how this progresses here. But so far it's based on the move up on the hourly and what we see here, these pivot lows, breaking the low, the greater than 100% retracement. At a minimum, I think stabilization today, maybe we'll see, as far as the futures go, can they get above here to get some type of retracement against yesterday's decline. Yeah. I'm just going to scroll this over here a little bit. Just to point out what we're looking at here, you see the cursor lining up. So, looking at this in the daily time frame, look at this at the hourly time frame, you can see this cluster of congestion there and why this is stalled here for the moment. And again, how far it's moved down, where it's at, this little congestion there right now, sideways, maybe a little bit move up, and we'll see how it evolves. Coming in down here a little bit, into the open. We'll see how it sets up here. Now the S&Ps, they held this congestion. You can see there's no pivots there because there's no 3 higher lows to the left. But that aside, there's no perfect setup, or we've looked at 2 in the past, 4, 5, 6, whatever. 3 is just a good number that works out overall for marking pivots. But recognizing this little pullback here and that reversal, and bottoming. I know there's pivots on a smaller time frame, and you can see them all clustered up there. So the S&Ps are holding this area for now. You can see the same little head and shoulders bottom that's occurring. If it does dip to catch up with the NASDAQ a little bit, I don't think it's going below this area today. And so that leads to, I'm going to look at the spiders and then SPX to get some idea as far as today's 0 DTE. All right, so spiders right down here, and mark that off, which I already have marked on. What? Hold on. Okay, so I just eyeball that 406. It's actually the bottom of that bar is 406.82. Wow. I just clicked it. I wound up hitting it exactly, so it doesn't always happen. So that would be the downside target if this would continue to go down today. But again, you can see those pivots there and this, but this would be ultimately where the area where it would hold its most significant support. But it's an area, so it doesn't have to go down there. Closed under the 20 yesterday. You got this congestion there to the left. As I look at both of these markets, it suggests to me the downside today is quite limited compared to yesterday. And we'll see, how far it traveled, the support, and now you got to be thinking about the unfilled gap, which is sizable up there. Going to get up there, retrace the Qs, head and shoulders we talked about, and you kind of got a pretty bearish. I guess this is called an island reversal type of a pattern where it gaps up, congestion, and down. I guess more bearishly would be if it had a more sideways type of a pattern. But you remember here where I mentioned, the commentator on the media there saying, "Oh, we're up 5 days in a row. Things are great." It's like, be careful. Up at resistance with 200 MA. It's been going up for a while, and so on. So coming down a little bit here. Let's see where that is. Basically, right at yesterday's low. Okay. And SPX, basically right there. And so, what? 41.95. 41.95. Oh, you want to go up top? Good morning, Roland. 41.95. Well, probably, Jacob, probably. 4,200 obviously would be better if we have to wait for a bounce. There isn't much there. I think you might think the downside is riskier, but as it's going down here this morning, we can even get below 40.70. And if it dips further, you can get down to 40.60. So this swing low right here is 40.79. Let's call it 40.80. So it would have to get down there and then below it. In my opinion, it ain't happening today. So it's bigger premium down below. Will it get up to 4,200 today? I don't think so. But this has been strong. There's no news coming out today, economic news. There's this thing tomorrow going on. So I don't see it as far, there's this stabilization. But, we've got these interest rates continuing to push up. And, of course, that's putting pressure on the markets. For the 5 years up against this pivot, maybe it gets above it. And the 10-year, it's almost there. So I would think these are going to stall. So while they're up here, they might, when there's little pressure right now on the markets, I don't think they're going much lower. But But don't disagree that they're probably not going to get to 4,200 today either. So whatever your choice is. YM coming down to support. Let's see the cluster there, that congestion. And you can see the same little head and shoulders type of bottom. So if it goes down this morning, obviously that premium at 4,200 is going to evaporate pretty fast. But down below is going to get even fatter. And so as we look at different markets, what is the downside potential today? And that's the basics of a credit spread. Is like, okay, I see the downside potential. Maybe it could get there, but its likelihood of getting below that, based on how far it's traveled to get there, in this case, is relatively small. But can you see 4060 seems far away and no juice? Well, it's 55 by 70 cents, so that ain't bad, Rob. But if it dips here in the, at the open for the first few minutes, that 55 by 70 is going to get fatter. So I don't think it's going to get there, just based on what I've already said. But if it gets a little closer to it, there's going to be premium. I know what you're saying on SPX. I'm looking at the quotes in my other screen. Right, so here's SPX. I've already showed you this low right here, which is that cluster of pivots on the hourly. So can it get below that? It potentially could get close to it, but I don't think it's going to go below it. And even if it goes down there today, Rob, it ain't going to stay down there. Now, I say that as if it's an absolute, but just based on patterns, if this had a drop into 10 o'clock down there, I believe buyers are going to show up even for a technical bounce. Right? So I don't know, there wouldn't be any moving averages down here. If you start looking at other stuff, exponentials or who knows, maybe there's a moving average here. I don't, we look for a confluence of multiple things. So, you got this congestion, you got this swing right there, and then there's nothing. But nothing, which we talked about yesterday, this momentum move, it's already fallen this far. And I think if it falls a little further, that is going to be the extent of it in the short term. All right. Russell, same little pattern going on there. It's on support, deep retracement. Little downside further from that. You got this bottoming tail right there. So Dan calculates ROI as a net credit. I don't know. You could ask him when he comes on or what. All right, Bitcoin is up here a little bit. It got clobbered, right? And it's on the support. Basically, it's on the edge of the cliff here, and I think people that bought it here have to be holding their breath a little bit here. So at least that's stabilized for now. Oil continues to bottom out. This is what we've been talking about over the last week or so. Oil to hold this area, and there's multiple oil stocks that look pretty darn good, like they're going to go higher. And with crude oil popping up here, I don't see how they're not going to be in favor today and follow through on some of those patterns we talked about yesterday. All right, silver down, of course. Gold is down, stabilized. Dollar ripping, down here. We said it's likely to bottom here, and if the dollar is going to bottom, precious metals aren't going to do well. This is starting to go up, and with interest rates going up, is basically, on a certain level, with the dollar strength, the pullback, and you can see the inverse relationship here. On a certain level, I'm surprised gold isn't even lower. With the way the dollar and interest rates are moving up. So maybe that's a sign of some early bottoming action, stabilization. We'll see. You can see on the weekly chart, it's a pretty long-term area of price support here. So let's see what happens. Does the dollar begin to pull back? Do interest rates begin to stabilize? And all of that. Right now, it's just not the place to be, maybe at times on the short side. And the transports, of course, they've come in also. They held the 20. So everything is in pretty much sell mode. But for today, I think the downside's limited. Probably some obviously stabilization, and maybe even some upside. We'll see how it all unfolds. But, pointed out how to follow the trend. And you know what? When you don't see any pivots like there are here, that means the trend on a certain level was too strong. There was overconfidence. The buyers were falling over themselves because it didn't pivot at all. No retracement whatsoever. When that happens, there's little to no support underneath. And that is the risk when you buy too high. Is it the right time to gradually accumulate gold ETFs? I don't think so. I don't, unless you're super patient, right? Because I don't think they're going to do anything as long as the Fed is in raising interest rate mode, maybe after the next, raise in rates. But when you see the 3-month popping up to new highs like that, maybe down at support, you buy some. So, all yours, Dan. How high can the dollar go? As high as it wants. I don't know. The data, I'd have to go back, someplace like TradingView has long-term data. If you go back to 2000, which this ETF doesn't have the data, but if you go back to 2000, the dollar was higher than it is now. I recall that. So while it's clearing these highs here, the probability of the dollar pulling back significantly while the Fed is raising interest rates and this 3-month is going up as it is, the dollar isn't likely to weaken very much. And, you could always look at the euro and, it's broke this support, down here. We can go to the monthly. And I mean, it's below parity with the dollar now, so there ain't much to stop this from going down. Right, so here's the euro. This looks like it's at around 2,000, somewhere in that area. So I wouldn't bet against the dollar. All yours, Dan.
Good morning. Yeah, there was an article in the journal about the euro getting pounded, which is obviously a reflection of their poor economy, inflation, rising oil prices.
Sorry to interrupt. By the way, we don't talk about it very much, but if you look at ETFs of Europe, they look a lot worse than here. And so when last week, when our market started to stabilize and turn, there were sell setups over there, and that looks lower.
Well, give me a symbol. I know Germany, EWG. What's the one for
I'd have to go on. All right, I could tell you. Hold on.
It's Japan.
EWG, as you said, is Germany. EWQ is France. United Kingdom is EWU. WQ, I said, was France. And hedged against the dollar, HEDI. So you don't have that dollar risk with HEDI, but I mean, they gap because of, those markets.
All right, so yeah, all our opens look fine here. We did 2 earnings, naked puts. We did, I forget, like the 410s on a Pan W. Way the heck over here at this prior low. So that's, I said, just bid a nickel and take it. Zoom, we also did one. And this is gapping against us. That's a huge gap way down here. Look at that, right to the May low. But if I were looking at this as a brand new trade, I would be looking to add. 5, 10, 30-minute high. It's still being sold pre-market here. We sold the 77s. So even with this ugly gap down, I'm just guessing based on experience. It's impossible to tell because you don't know what the volatility crush is going to be. But we're still $8 out of the money. So I will bet that we still have a small open profit at the open. So obviously keep an eye on that. MRO was in the weekend letter. I sent out a text alert yesterday saying it looks even better with yesterday's bottoming tail. We entered VLO in the advisory letter. That's gapping up. That looks great. EOG we're in also. So we got a couple good oils there. ILAG. Hey, it's a big percentage gap. That this could be a monster bottoming pattern, recent IPO. I have no idea what they do. Let me put that in here. I just saw corn going by the ticker, so I always look at corn and wheat together. Nice bottoming pattern here. You got a buy setup on the monthly, so let's try to sell a put spread on that. 25, 22 and a half. China stocks had a good day yesterday. EDU. I'll come back to it. 30-minute high maybe. Fubo went up crazy like a meme stock. Got slammed. Now it's gapping up a little bit over yesterday's high. 30-minute high. Maybe that's due. But when you get a monster retracement like this, you never expect a new high. We're just price void would be looking into this for a partial bounce. Maybe $5, maybe $5.50. So that would still be a beautiful swing trade. Thomas Moss. Yeah, nice closing and golfing bar yesterday. Sure. Moss, I'll put it on the list. Below, we're already in. SDC, there was an article in the journal that said they better get their act together or they may not be around. Same thing. It kind of looks like the other one. Way up, way down. Ford. So they're laying off 3,000 people. That's an ugly gap with a big price void. That has a lot of air below. It's kind of just doing nothing here pre-market. That would be a nice day trade short, maybe 10-minute low. I'll put it in a window. Oh, we're also in this thing, BBBY. We're short the 7.5 puts. Or Friday, there was another article saying, they got a financial crunch. Particularly because of the lead investor bailed, the GME guy, I guess. Twitter's in the paper. They have a mole who came out and said Twitter's a bad boy with all their bots and everything. So wheat here, it's still in a downtrend daily, but what kind of got my attention here was the weekly. It's not a W bottom, but it's still a retest. So so the corn is much better bottoming pattern, but there's signs that it might be bottoming here. This shows that it's gapping down, but I don't see it. Light volume. I'm going to delete you. XPEV. The EV market's been getting hit, which surprised, in light of all this money being thrown at them. Look at Riven, Neo. I mean, these things look bad. And now Biden's going to forgive a ton more student debt. When does it stop? Look, this is an M top. Momentum move up, come down, failed. That's a short under yesterday's low. It's in an uptrend, but yesterday's low, it's a short. April, this thing's been on fire. Look at the monthly. Monthly's been in a trading range for a couple of years here. Wow, this thing used to be $160. Insane. Thomas Oxy, that one I'm not crazy about, just because the bar is too big. It's an inside bar. It's more of a day trade. But for swing trades, I like these other ones better. Oh, I changed my MRO for some reason. MRO for a new trade looks fantastic. Big bottoming pattern, price void. GCT recent IPO. That's all over the place. Marin up to 220. I don't know. That looks like a wild day trade stock. RGS gapping down. Bison. These are a couple of earning stocks. I don't know if that's real. Gapped up and came in. We'll come back to you. Gapping up a little bit, but no pattern. Macy's was up more this morning. It's a buy setup. This could be a naked put candidate, 30-minute high. I'll put it in a window. Macy's, Grammy Ahmed. Yeah, I mentioned it yesterday. I had 3 orders out to try to sell way out of the money naked puts. I didn't get filled on a single one, Grammy, because they were very spreading. I wouldn't touch this as a directional unless I got 1 or 2 inside bars, bullish inside bars at the upper third. Couple of alarms going off here. But as I just said, I was trying to sell put spreads on. All right, all my oil alarms are going off here below EOG. So those all look great. And ZTS low alarm. All right, we shorted this yesterday. It was in the weekend letter. Let's go ahead and tighten the stop way up here, 166.95.